Welcome back to a brand new episode by the Dutch Investors. I'm your host Siem, and today we are talking about the world of investing, wisdom, and two legendary minds, Buffett and Munger. And to help us do that, I've got a very special guest with me today, Alex Morris. He's the founder of TSOH Investment Research on Substack and the author of the recently launched Buffett and Munger Unscripted book. In this episode, we'll explore Alex's journey from equity analyst to independent thinker and author, what it's like managing your family's net worth, and of course, we'll take a closer look at what inspired him to write this book. I think you will really enjoy our talk. So let's not waste any more time and jump straight into the episode. Well, Alex, it's very nice to meet you. I'll say it once again. Thank you for coming on the show. I appreciate it a lot.
Yeah, thank you for having me. I'm excited.
Well, as you probably anticipated, I would love to talk about your book and hear all the ins and outs. But before we do, I'd love to get to know you a bit better. If I've done my background check correctly, you spent a decade as a buy-side equities analyst before launching your Substack, The Science of Hitting. Is the name a reference to baseball by any chance? Swing if you see a fat pitch?
There you go. You got it.
Yeah, well, it's pretty creative and it works well. I get it. I don't want to ask the same questions everyone is asking you already, so I'll try and get creative today. But just to start off, could you just tell us a little bit about how you got yourself into the world of investing?
Yeah. I really, first of all, I'm in my mid 30s now. So when you ask about things that happened when I was, 20 or about that age, my memory is not as good as it used to be. So I'm doing the best I can.
I see.
As I remember it, I was in college and I wasn't totally sure what I wanted to do. And, I think when I was younger and even during college, I started a business with a couple friends. I think I had certain interests in business, call it, but it was kind of more entrepreneurial than anything else. And it wasn't really related to, investing or value investing. But around that time, I stumbled across the Berkshire letters and became, I guess for lack of a better term, like obsessed with everything about kind of Berkshire and investing and thinking about this, connection between business and investing, basically. So that year was, I believe that was 2007. And 12 or 18 months later, a buddy and I, he also became kind of obsessed with this stuff. We drove to Omaha from Florida for the Berkshire meeting. That was the first time I went, and I think I've been back like 7 or 8 times since then. It's always a really good time, and it's a place to kind of to relearn a bunch of things that you already know, right? But they mean a lot as you kind of as you grasp them again, as things kind of fade away sometimes. And the book that really inspired me as a young investor was The Essays of Warren Buffett, the book by Larry Cunningham, which is basically a collection of all the old shareholder letters organized by topic. And I'm sure we'll get into it, but that period of my life, call it 15 years ago now, was obviously informative in terms of leading eventually to Buffett and Munger Unscripted.
Yeah, I can imagine that just being at the Berkshire meeting is so much more. Yeah, it brings so much more of a feeling to it, right? I mean, you can get the information anywhere else, but it just adds an extra layer. I can imagine.
Yeah, and at that time, there was no recording, by the way, either. They started that in 2015 or so, I want to say. So back in those days, I remember Whitney Tilson was someone who did this. A few other people did as well. They'd kind of put out their notes from the meeting. They'd scribble down whatever they could during the Q&A, but you always got something that wasn't complete, and you kind of wanted to hear Warren and Charlie in their own words, and you could only do that if you went to the meetings. So, it was certainly a different time than the Berkshire meetings of today.
Yeah. We talk about it all the time. since we live in the Netherlands, it's a real hassle to get there. You pay thousands of dollars or euros just to get there.
Well, that may be a sales pitch for the book right there for anybody in the Netherlands who's going to pay thousands of euros to fly. You can get 30 years of meetings for a lot less than thousands of euros.
Yeah, I mean, it's a nice plug, but we'll get to the book a little later as well. What is it about investing you like so much?
Yeah, I mean, going back to what I was saying in terms of my interest in kind of in business and, obviously the idea of kind of financial freedom and those things, but I kind of see it as connected to everything, basically. I mean, at least in terms of a capitalist society. Everywhere you go and everything you see, generally speaking, has some component of this idea of, trying to please customers or meet demand of customers and fending off competitive threats and then thinking about, opportunities that may or may not exist in given businesses and how long they might last for. And just all those things. I just think you kind of see it everywhere. And it's just really interesting to kind of think about like how that actually works and how it changes over time. And so that's really where my fascination and interest with it lies, as opposed to, some of the stuff that I kind of view as the more beginner's mindset of this game, which is, oh, okay, this thing's at $22 and I think it's worth 26. So it's about like that part of it all. It's obviously relevant. That's not the part of it that I really get excited by. I get excited by thinking about how businesses evolve and how the influence of people and incentives plays into that. And that's part of it that to me is so interesting.
Yeah, I absolutely agree. Some people call it passion. My girlfriend would say I'm obsessed, but just the way that everything is like interconnected, right? Like a web. And whenever people say that they don't care, it's like saying you don't care about how the world really works, right? The reason businesses do what they do, why people do what they do. It's just, it fascinates me. So I completely understand you.
Yeah, and I was having a conversation with someone today about this, who I went to lunch with, and we were just kind of riffing on. It's really funny to think about too, and this is obviously common across various industries over time. At any point in time, you look and see large companies that have really strong competitive positions for one reason or another. They have really strong financial positions, and kind of inevitably throughout history, over years or decades, those things tend to kind of go away. And it's just the interesting interplay between the actual inherent strengths of a business in terms of its position and its financials, but then also the other impact of bureaucracy and people and incentives, and how it's really, really difficult, especially with size, for that second kind of variable to keep pointing in the right direction. And that's how you have upstarts that come out of nowhere and kind of kill these companies for lack of. It's just a fascinating part of life and in business.
Yeah, absolutely. Is it true that you manage your family's entire investable net worth? How does that work?
Yeah, my family, like my wife and I, other people in my family they manage their own investments. But yes, everything that I'm in charge of for our family, that I run that in the strategy. The portfolio that people see at TSOH Investment Research, that's everything I have.
I see.
There's no side money or anything like that.
I see. Okay. So when you invest for people, you naturally feel like a certain level of responsibility. But I can imagine that this sense of responsibility takes on an extra layer when it comes to family. Do you feel that it makes you more cautious, or has it made you more risk averse maybe? Or do you not notice any difference as an equity analyst?
Yeah, I mean, the experience I've had especially in terms of the RIA world and managing other people's money, you have to, you always have to account for the ability and willingness of the person that you're talking about, their ability and willingness to bear risk. And, I'm also younger and, kind of the person at the controls. So I think it's not too surprising that more often than not, I feel like my ability and particularly willingness to bear risk is different than someone who might be, call it 70 years old, which obviously makes sense, right? So yeah, you have to account for that. And, it's a really important part of managing money for people who do, or especially in the RIA business. Like you have to you particularly someone from my perspective, you come into it thinking about security selection and maybe portfolio construction within an equity sleeve, right? But there's so much more to that conversation in terms of structuring things in a way that's going to work for that client over time. And it's a big reason why I think investment advisors, generally speaking, the good ones at least, which not all of them are good, but the good ones really do add value for clients, even if it's not directly in the way that a lot of individual investors think about that question in terms of alpha relative to an index or something. So,
yeah. Do you ever bounce back ideas on back and forth with your wife? Because years ago I read this book in the Netherlands. It's called Blondes Invest Better. It's about women that actually beat men most of the time because of obvious reasons, right? Psychology, less adrenaline driven, or I assume she's not really into investing, perhaps, since you run it. Do you ever go back and forth with her just to get her ideas or thoughts?
Oh yeah, no, I ask her about a number of ideas. I asked her about Ulta here recently. I asked her about, I know Nike did a deal with someone called Skims. I asked her about that because it's certainly outside of what I know about. I've asked her about Lululemon and a couple of competitors in that space. I've asked her for a lot of things. She has very strong opinions too, so it's I can get answers to my questions.
Yeah. Sometimes it's a bit anecdotal, but I tend to do the same sometimes, just to get, just like you said, get a feeling. Or
she doesn't spend too much time talking about PEs or relative valuations, which I personally prefer. So
she doesn't. How boring!
It's yes, exactly. She doesn't tell you about the relative PE or the PEG ratio, which conversations I generally speaking can do without. So it's good.
Yeah. All right. Well, I would love to talk more about your book. That's what you're here for, I guess. Buffett and Munger Unscripted. First of all, great name. I have the book with me, standing right behind me. And I'll be completely honest, when I first saw your pre-order message, I was a bit skeptical. I was like, how is he going to make a good readable book from, what is it, decades of Berkshire Hathaway meetings? But I have to give it to you, it's exceptional. So for those listening that haven't heard or read it yet, I would highly recommend the book. I believe it's available in many places. I got mine on Amazon. It's basically all the wisdom from Munger and Buffett you'll ever need. It's incredible. So hats off, Alex.
Thank you so much. I kind of really looked at as I thought about what I wanted the output to be as I was working through it, I had two ideas in my head of being addressable and for someone who's newer to kind of the material in terms of a business or investing background, someone from that, period of their evolution, being able to pick it up and still find a lot of conversations that spoke to them and could be useful and valuable. Some of it would be a little bit out of reach for them, but maybe they could get there over time. But the other test at the other end of the spectrum, I thought of, the kind of the diehards, the people who have, in a lot of cases, probably listened to many, if not all of the meetings, who could have looked at a book like this and said, like, basically, why do I need this? My goal was for those people, once they've had a chance to flip through it and read it, hopefully more often than not, they'd walk away going, this is actually a really valuable resource to have despite having gone to those meetings before. And that's kind of been the consistent feedback so far. So that, that obviously means a lot to me, given that I kind of view myself as being in that group too. So I'm glad I could, kind of add value for people in that bucket. And also, it means a lot to me too. I've read a lot about Warren's life, obviously, and there's certain things he's done outside of investing where I think he's an inspiration and an idol to me, and philanthropy is one notable example. And, I think kind of like Warren in his younger years, he was a lot more successful at this than I am, but you can become really focused on your own journey and your own capital accumulation phase, and you can kind of push those things to the side. And, this gave me an opportunity to give back. I'm giving back half of the net proceeds from the book to Glide, which is a charity that Warren has supported over time. So it felt good to be able to do something like that too, which honestly I, up to this point in my life, really probably haven't done enough of. So it's been a win-win-win all around. So I'm excited that's worked out.
Yeah, successful is all relative, right? You're successful in different ways too. I believe you mentioned that your book was inspired by Larry Cunningham's The Essays of Warren Buffett. What ultimately drove you to write it? Did you feel there was something missing in existing literature, or you wanted to address, or perhaps anything else?
Yeah, I mean, it really starts with, as I said before, like the meetings simply were not accessible for a really long time unless you were in the room. Then they started, as I remember it, they started webcasting them at one point. I believe it was in the mid 2010s. I could have this incorrect. But then in 2018, I know this for sure, they released all the meetings going back to 94, which is great to now have that. But obviously for a lot of people to, go through what ended up being 31 years of meetings and they're, call it 5 hours a piece. Like that's 150 hours of time to dedicate to listening to Warren and Charlie talk about business and investing, which I'm sure some people have done. Some of them are probably listening to this podcast, but most people were not going to commit to doing that. And I just knew from having read transcripts and other things and having listened to some of those meetings that there was a ton of value in there. And some of the value in my mind that was present in some of the earlier meetings was going away or has gone away completely in the later meetings, as kind of the nature of the questions has shifted a little bit, and it's become less of a shareholder specific meeting and more of a lot of questions about investing more generally, or life and politics, etc., which is fine. But I thought there were a lot of gems and things in the earlier meetings that would be really interesting to a certain type of audience. So yeah, I looked at, the Cunningham book that had been so important to me as a young investor and still was at the time, and thought maybe I could contribute kind of a version of that for the meeting. So I got started working on it, probably without considering how much work it was actually going to be. Eventually submitted a draft to the publisher, which is where I thought my work was done, and I was also incorrect there. There was a lot of work left after that point. But yeah, it eventually made it over the finish line. So I'm glad I did it.
Just out of curiosity, what was the writing process like for you? Was it harder or more time consuming than you initially expected? And was there any part of the process that you really didn't like or didn't enjoy?
It was pretty time consuming. I mean, one of the big things is the way that, in particular, Warren talks. It required a decent amount of editing at times because he can cover so much ground in a given answer and can start going down a road and then maybe turn in a different direction. Whereas I then took the kind of source material and tried to put it into topics, it wasn't always incredibly clear like where something should fit, or does it need to be chopped up in some way to go into multiple sections. Like, so I ran into that a lot. And then obviously over time, as I started listening to more and more meetings, there were a lot of questions where sometimes it's like, okay, that's almost verbatim what was said previously. It's easy for me to just chop and not include that answer. There's other times where like half of it was the same, and I'd have to decide, is this significant enough to contribute its own part of the book? And as I'm doing all this, obviously I'm trying to have some consideration for the length as well, which the book still ended up being, almost 500 pages. So it was balancing a lot of those things, and, also coming to the exercise with a ton of respect for Warren and Charlie and wanting to do the best job that I could to kind of faithfully present what they had said, or at least my interpretation of what they had said, and to do so in a way that was also as concise as could be in order to, make it accessible for people. So it was kind of always balancing those things, getting a system of organization that actually made sense. So yeah, it took a little bit of time to get the ball rolling, but then once I had like a good process, and also when I had a deadline from a publisher, that helps too for getting your work done in time. When I had a fire under my butt, then I really started rolling and was able to complete it.
Yeah, I can imagine that being very difficult, where something can fit into different buckets, right? Psychology, value investing, incentives, all at the same time, maybe even. But this is also what impressed me a lot about the book. It was the layout. It was entirely different from what I had ever read before. The book is not your typical star in the front and read all the way to the end. The book is written by topic, which is so useful. I remember wanting to know more on capital allocation. Grabbed your book, looked at the table of content, and there was all the insights I needed about capital allocation. I assume this was the idea when you started, right?
Yeah, that was always the idea. How I was actually going to do that is that evolved a little bit over time. I had a vague sense of like, okay, I'm going to probably have something on capital allocation. I'll probably have something on accounting, but then you start going through it and going, okay, how much is there really a sufficient quantity of stuff here for it to be its own section, or is it part of a bigger section? So that kind of organization of it all took a bit to really kind of get my arms around. And you see it in some of the sections, like the first part on value investing is like 70 pages. And then there's other sections in the book on accounting that's 15 pages. So there's certain topics obviously that have a little bit more meat on the bone than others. But yeah, I was trying to organize that in a way that again was like kind of complete, but also structured in a way that would be digestible for people as they went through it.
Do you have a favorite part of the book, or since it's like organized by topic, is that a really difficult question?
It's so hard. It's like kind of feels like my baby at this point. I mean, the section.
Yeah, I can imagine.
The section on Berkshire, and I kind of write this in the introduction. I think the section on Berkshire really speaks to me because it's Warren's version of implementing all of the kind of lessons and insights throughout most of the book, right? It's where this all comes into practice and where you get away from something that's a bit more theoretical to the actual application of incentivizing managers, of thinking about capital allocation. Like it's where it actually occurs and where you can see how Warren's done it himself. Warren and Charlie have done it themselves. So for me, I think that's a section that really kind of stands out. Another really notable one is the section on See's Candy and Coca-Cola and thinking about kind of consumer brands and what is a moat and how does that widen or shrink over time. And, it's really relevant for a lot of the companies that I own or that I follow, like Fever Tree or other names, where it's just really interesting to think about what those, or Celsius and energy drinks, Monster and energy drinks, like what those businesses actually are, how the brand grows or shrinks over time. Like those are just really interesting discussions. And I think, Warren, as he kind of says, or directly says in the book, like the Coca-Cola investment most likely would never have happened without the See's Candies investment. Informed so much of what they think about the topic and what they learned. And there's so much of that that's true across everything in investing, this kind of cumulative learning process where everything that happened between the beginning of time and now informs what you do next.
Yeah, absolutely. Yeah. It's sometimes it just blows my mind how one can just explain these difficult concepts in just like baby language, and Munger and Buffett are perhaps the best at it. It's just incredible.
No, that's the most, I think that's probably my single biggest takeaway as someone who's followed them for a long time, obviously. So I've always kind of known this to some extent, but the breadth of questions that they got asked over the course of more than 3 decades, and their ability to say something insightful, but also concise, as you say, like basically to explain it in a way that people in the audience can surely understand it. I'm always amazed by people like that, because I think I have some level of knowledge about like the companies and industries that I follow and about kind of business and investing as well. But it's such a narrower and probably less deep understanding than them, with such a wide and deep understanding of so many different topics. It's just amazing. It's a sign of someone who's really, really, really smart. And that's what they are.
Yeah, which is fine, right? Another idol of mine is Neil deGrasse Tyson, and he always says it's okay not to know all the answers, right? It's about being curious and just finding out and reading on it and just doing your own research on it. So you don't have to know everything, and Buffett and Munger don't know everything, which is fine, right?
Yeah, if anything, they're a big part of their pitch on how to be successful in investing in particular is to know what you know really, really well, and to not spend excess time or resources trying to understand everything when it's not relevant to the question or if it's unknowable.
Exactly.
And that is a hugely important part of basically playing this game. I mean, if you can understand a number of things that you can count on your hand to the extent that you're going to be a long-term business owner, that would theoretically be sufficient for a lifetime of investments if you were selective enough on the opportunities that you kind of went after. So it's an interesting part of this game. There's some people who play a version of the game that requires holding 50 stocks at any given time and changing out 5, 10, or 20 of them every year, which requires a lot of new insights and a lot of decisions. And there's other people who own 10 things and they sell maybe one of them or replace one of them a year. That requires a lot fewer insights. Obviously, it also leads to a lot higher or more significant exposure to those 10 names. So there's trade-offs in everything, but it's an interesting part of the game, choosing what you're going to do or try to do.
Yeah, absolutely. I mean, it's all relative, but you're not a beginner investor. Compared to Buffett, we all are. But you have many years of experience and must have a deep passion for investing. And correct me if I'm wrong, but going through over 1,700 questions and 150 hours even of footage is no easy task for anyone. Were there any unexpected or perhaps counterintuitive insights you discovered during your research, even with all the experience within the field?
It's always hard to say because I don't, so much of this I've heard before, or I had like some inkling of what they would say on any given topic. So I don't know how my mind has kind of morphed on things that might have been surprising or not at one point in time. I mean, I think a big one is what they really mean or how they've acted in terms of something like if somebody offered a price for a subsidiary that was 2 or 3 times what it was worth, we wouldn't sell it. Like thinking through that statement and what it means and how people typically think and act. I mean, particularly in public markets. I mean, another really notable example is, as I said on prior occasion, as I've written about at TSOH Investment Research, the idea of starting to buy Coca-Cola shares in 88 and 89, buying more again, I believe in 94 was the next year that they bought, at a price that was 3 times higher on average than they paid in 88 and 89, by the way, which is something that value investors, generally speaking, are very uncomfortable doing, paying any amount more than what they had paid previously, let alone 3 times more, right? So buying more in 94, it eventually became a position that was more than 30% of Berkshire's equity portfolio. So it was a huge position. It wasn't like some immaterial position. Stock price was very volatile. I mean, in the fullness of time, a lot of things happened with the business in the fullness of time. And then you look back from today in 2025, they have not bought or sold a single share since 1994. And like just thinking about that, actually doing that in real life on a position that's very meaningful in terms of the portfolio. And that is so different than how 99.9% of people think you need to play this game or how they do play this game. And the person that we're talking about is someone who's quite proficient at the game, has done pretty well at it, someone you should probably learn something from. So I just think those examples are so extreme that they speak to a certain mindset and a way of thinking about investing that, again, like I just think it's really informative for people to grasp how Warren looks at the world, or at least how he's acted in a number of very prominent situations.
Yeah, his integrity is unbelievable, but also, I mean, it sounds so easy for those that are not really into investing or even are very interested in investing. It sounds so easy to just hold on, and everybody always screams, "Hold! I buy and hold forever." But when one push comes to shove, right? It's so difficult when the economy drops or the stock market crashes and everybody is in panic. It sounds so easy, but it's incredibly hard. And yeah, it's very impressive by him. I'm very impressed by it as well.
Well, even more so for value investors, I think that situation is difficult. What they struggle with even more, in my experience, from being one and watching others, is when things are going really well and the price is going up, and the valuation and the multiples going up. And again, I'm not even saying the Coca-Cola example. I'm not saying it in terms of like this is how you should necessarily act, or that it was or wasn't the right decision. I'm simply saying understand it in terms of kind of the underlying thought process. And again, it's funny to see to see what Warren has done in some of these very notable situations, and how I think it differs pretty meaningfully from how I think a lot of Buffett and Munger disciples, kind of act in practice. And it's just interesting to think about why that discrepancy exists, and what lessons are to be learned from there, if any.
Do you think you would ever do something similar with another famous CEO or investor, perhaps Bezos or Gates Unscripted, or?
I don't know. It's going to be a while. I mean, Warren and Charlie hold a very special place in my heart. And obviously the source material here was abundant, and it gave me a lot to work with. And it's a topic that I, also understand pretty well. So, it was a somewhat unique opportunity. And writing a book or compiling a book is also, it took me years to get this completed. So I think TSOH Investment Research is going to be my sole focus for at least the next few years, and then we'll see from there whether or not another book is in the cards.
I mean, you're around 30, you said, right? So if we estimate every 30 years a new book and you become 90, we have 2 more books to.
Well, in that case, I'm 35, so that's good. I bought another 10 years on the second book. I got 70 years old and 105 years old. So you'll be lucky. You'll be lucky if you get a second book, it sounds like.
I see. Well, it's possible. Yeah. It's going to be Alex Morris unscripted, but who knows, right?
Yeah, I think I've written enough at TSOH Investment Research to maybe compile a book. I don't know if it's as valuable and useful as Buffett and Munger Unscripted, but maybe I can give that a shot.
Yeah. If you were given just 10 minutes to sit down and talk with Buffett, what would you ask him?
Well, if he'd be willing to break his rule about, at the meetings, generally speaking, not being willing to talk about individual companies, I would love to ask about things like, I'm a shareholder in Netflix and Disney, and I've followed the media industry for quite a while now. And I think it was him. I think he said it was him, actually, in terms of the Paramount investment that they had for a period of time a few years ago. I'd love to talk with him about his thought process on something like that, and, what kind of was underlying the decision. Most of my other questions would be about, again, like more things that are more business related, what he's seen over time in terms of how large companies are kind of managed, and, what he's seen obviously at the subsidiaries of Berkshire and the companies that he's been on the boards of. He said a lot of these things publicly, I believe, but it's interesting to think about how those entities, kind of grow and morph and change over time. And I think that would probably be something that he obviously has a ton of insights on that'd be interesting to talk about. I'd love to hear him talk about, his thoughts about the life that he's lived, and, his thoughts on work-life balance, and, that type of idea. And again, something that I think he'd probably have a lot of interesting things to say about. So I'm sure I'd like to ask him about everything.
Yeah, I can imagine, but more questions that he doesn't really answer publicly, right? Yeah, that makes sense. I put you on the spot. It's a difficult question. I'd have to think a few minutes about it as well, since you only have 10 minutes, right? So
yeah.
You're not only an investor and an author, you also have the hardest job in the world, being a father, right?
Yeah, well, being a mom's even more difficult. Don't forget that. But yes.
Oh yeah, true. Number 2 then. I believe you have a son called Jack, if I'm not mistaken.
I do. He's 1 year old, and he's becoming he plays with a hockey stick like 18 hours a day, or hockey stick / golf club. So I think he's got to pick what sport he wants to play.
I think so too. If you had to pass one of Buffett's or Munger's lessons onto your kids, which one would it be?
Yeah, I mean, I guess it would obviously depend on if we're talking more of an investing or business or life lens. But I think the one that's probably applicable across all three is kind of opportunity costs and also incentives, and thinking about just really understanding how things work, right? And also, as part of that, not leaning against things where and particularly incentives are working against you, and thinking that you're going to be able to kind of like fight through that or convince other people to change their mind when the incentives are telling them not to. That is a way to be often unsuccessful and to be perturbed. It's kind of painful to do those things, which I've done at various times throughout my professional career. It's better to understand what's going on and to adjust accordingly. That's a smarter way to do things, and also to understand people's differing perspectives or interests or incentives for your own, and to kind of appreciate that, right? And that's harder to do when you're or it should be harder to do when you're 18 or 22 than it should be to do when you're 35, as I am. So hopefully you're growing and learning over time how to navigate the world and to have empathy and all those things.
Yeah, it's difficult. You have to learn as you go, and you're right. Yeah, good life lessons as well. Incentives apply to everywhere, right?
Yeah, absolutely.
It's one of the most overlooked parts of investing, I would say. It's the phrase Munger always said, right? What is it? Show me the incentive and I'll show the outcome. It applies everywhere, even in your work life, personal life.
Yeah, I love. He said, I'm gonna get the numbers wrong, but I think he said I've understood the powers of incentives more than 99% of people in my kind of cohort in life, and I've still underappreciated the power of incentives in terms of what drives people's actions and decisions. Yes, it's something that's really, and again, it gets to the idea of what I was saying before, right? In terms of you can play this game on I'm going to look at XYZ stock and see what sector it's in, and here's the relative PE, and this thing is 18% undervalued. That's one way to do it. Or you can step back and go, okay, like what is competition like in, just pick a random example, kind of the mature consumer packaged good industry, and who's actually running, PepsiCo and Kellogg, and what are their incentives and where they come from, and what are the company strategies, and how does this all kind of fit together in terms of an organization with thousands of people who, also have their own incentives and have certain ways of thinking about what their job is. And it's just really interesting when you start to think about things through that lens, and you start to put business quality as a starting filter for the investment process, as opposed to a kind of price to fair value calculation. For me, it makes the game certainly different. And I think it also makes the game for me a bit clearer in terms of what I'm trying to find. Good
points. Yeah. Your book is your way of honoring, I guess, Buffett and Munger's wisdom and just their life. I'm pretty sure that Munger would have loved your book if he was still around. It's a great way to remember Munger for his jokes, pure honesty and wisdom, but also Buffett, of course, known for more of his storytelling, wisdom, of course, but also, like we said, integrity. We'll have to really appreciate Buffett even more while he's still here. I'd love to wrap up this show with an open-ended question, and if we ever do this again, check in on how things have evolved. What are you working towards right now? What's the bigger goal? Whether it's your Substack, your book, investing career, personal life, whatever. Where do you see yourself heading in the future?
Yeah, it's a good question. In terms of the book, it's continuing to hopefully get in front of the right audience, people who would find value in the book, and it's pretty challenging to do, generally speaking. I've done a bunch of podcasts and things like that, which seems like the most valuable way to do so. I'm also going to be at the Markel brunch in Omaha in May, signing copies there. So for anybody who's at Berkshire, swing by and say hello. But yeah, so the book is, it seems like I'm at the tail end of that project, so it's mostly complete. At TSOH Investment Research, I think my objectives are, personally, continue to build the strength of the business over time, right? But that's really an output. The input is continuing to find subscribers who are a good fit for the service, continuing to produce, the highest quality investment research that I'm capable of. Hopefully having that be apparent in the results, which is all transparently disclosed to subscribers, by the way. So yeah, having that continue to just be a snowball that's, hopefully rolling downhill, and which has been, a great learning experience here over the past, coming up on 4 years. And then, having that fit inside of, or as part of, my life overall in terms of things I obviously want to do with my wife and extended family and my son and all that jazz. So it can be hard at times, especially when you go outside of the 9 to 5 salary job to something that's kind of your own, where what you earn in any given day feels like it's completely up to you. That can become a bit overwhelming and really time consuming, obviously. And there is a part of it where obviously you still want to make sure to commit appropriate time to it, but where you don't want to kind of burn yourself out or become overloaded on what's happening any given day or week. So that's kind of a balancing act that honestly I've had to learn to some extent over the past couple years. And I think I'm at closer to a place now where I can kind of more effectively balance that to, again, like do the highest quality work I'm capable of, but without kind of obsessing too much. So just continuing down that path, I think would be good.
Sounds awesome. Well, thank you so much for coming on the show, Alex. I really appreciate it. I hope you enjoyed the conversation as much as I did. I really think people will enjoy this one. If you're still listening, I highly recommend getting the book. It's filled with valuable information, and Alex did a phenomenal job making everything easy to find. Plus, 50% of profits after taxes will go to one of Buffett's long-supported charities called Glide. So you're not only getting a great book supporting Alex, you're also helping charity. So do so. It's incredible. Where can people find you, Alex?
Yeah, I just got to say real quick, I think the last luncheon that Buffett, he donated the proceeds from the luncheons to Glide. I think the last one may have been for a couple $1 million. So we got to sell a lot of books if we're going to compete with Warren's last donation. So if people want to help out, they got to buy the book. We got to beat his donation.
Absolutely. But small things add up.
There you go. We just need to sell, I think, a couple 100,000 copies if my math's any good. We got a ways to go.
We have millions of investors worldwide. It's got to work.
There you go. We should be able to get there. We need some time. But yeah, thanks for having me. The best place to find me is at TSOH Investment Research. People can also find me on Twitter at TSOH_investing.
Awesome. Well, thank you, Alex. Hope to talk to you again soon, and best of luck.
Thank you. Have a great day.